Hello, everyone. Welcome to another installment of Lenders and Vendors, Dishing with Dot Donovan. Today, we have a lender who is also a personal friend of mine. I've worked with him more than I think any other lender out there. His name is Bill Miller with Cross Country. Bill, could you take some time and tell us about you?
Yeah, thanks so much for having me this morning, Dot. I've been in the business for 20 years, helped over about 2,200 people through refinances and purchases. I love working with first-time home buyers because it's their first time, so it always makes it feel like it's my first time. We are licensed in Pennsylvania, New Jersey, and Delaware.
Woo-hoo.
And I've been with my current company, Cross Country, for it'll be 5 years this summer.
Oh, wow, that's awesome. And I went like, I wasn't on screen when you said 20 years, but I went like, because I didn't realize, because you're very young to me. You're very young.
Just look that way. Just look that way with this video.
All right, everybody. So I'm glad you joined. Today, Bill is going to tell us about several different non-conforming or Alt-A loans that don't fit in with the normal conventional FHA, USDA type of loans. So Bill, tell us some new information.
Yeah, so thanks, Dot. So we definitely do the conventional FHA, VA, USDA loans like standard everybody else, but a lot of people don't know about some of these ulterior programs, and a lot of times it deters them from even putting in an application, which hopefully this information gets out to a lot of people that they think they might not get approved, but now they might think, well, let's at least try this out. So the programs I'll go over is a profit and loss program, bank statement program, escrow repair program, and a reverse mortgage, and a 1-year tax return program for the self-employed people that might have had a bad time in 2020. So I can start with that one. We're getting a lot of calls from January till today, even, where we are getting clients that are, that were self-employed that might have only made or claimed, less than $20,000 a year in 2020. And standard loans want you to see 2 years history. So they'll look at 2020 returns and 2021. So if you're looking at 2020 returns and they're $20,000 a year, that's not a lot of income a month to afford you for a new house, but their regular income might be $80,000, like a good year like 2021. But then they have to mesh that together and they still can't afford what they want. We have a program with Freddie Mac called LP where you can just use 1-year tax returns to verify that, as long as the client has been self-employed for 5 years. So a lot of people are, that reached out last year that couldn't qualify are calling this year, sending us their 2021 returns before they send it into the IRS. We review them to let them know what they can afford based on how they file. And then they can kind of structure the return how they want to because they're self-employed. They can write off as much as they want, or they can claim as much as they want. So a lot of people aren't aware of that. They think they have to average it out, but we're literally helping them show them what they can be approved for just by 1-year tax return. So that's one thing. And also they don't know that, oh, well, we can kind of manipulate a little bit just to make sure we budget for the house that we want to. The second one is a profit and loss program. So if you're self-employed and you write off a lot of your expenses and you show little income because of those things, but in reality, you do make cash business on the side, like catering or restaurants or even contractor work, any of those things, then we can actually just use a profit and loss statement from an accountant. We get a letter from that accountant stating how long they've been self-employed and how long they've been your accountant for. And we have a program that just does that. We don't even need your tax returns. So again, that's another product out there. There's some other restrictions on that because it's a little riskier for the bank to take on, but that is a product that a lot of people don't know is available. Bank statement program is another one. So again, self-employed, you deposit a lot of money through your income, through your business bank statement or personal bank statement. And instead of using your tax return, we use those monthly deposits that we see in your bank statement. So it does make a difference whether it's deposited into personal or business on how much of that deposit we can use. If it's personal, we can use 100%. If it's business, we can use 60% of all the deposits coming in there and use that as a monthly income. So again, those standard W-2s, pay stubs, and tax return incomes, they fall into all those categories with the standard loans, conventional FHA, but these products are out there and we can help, clients buy houses with them and not get, caught up in the red tape with the other programs. Two other ones would be escrow repair or, fixer-upper programs. 203K is the big one that a lot of people are aware of, where you buy a house that's dilapidated, not in great shape, and we can help finance the home improvement work into it. So that way you can benefit from having that finished value and the house that you want to move into after the fact. So, you find a house that's dilapidated for 100,000, but all the other houses fixed up are for 200. You put 50 into it. You now have a loan for 150, and you have 50,000 of equity already built into it. That's something we can do along with little things. So sometimes little houses have like little knickknack things wrong with them, like just a leak in the roof and that's it. And you don't know it until you go through and get the appraisal done. We actually have an escrow repair program where if you get contractors that bid on it and we get their contracts and bids and invoices, we can hold that money in escrow and not need to go off of future value with the client. So that way you can still close on the house. And then once that item is fixed, then we release that money to the contractor for that work. So it doesn't hold up the process. The last one is reverse mortgages. So reverse mortgage has been a bad stigma for a long time because they didn't have great rules and customer friendly type stuff. But nowadays they do. A lot of it benefits the client. So a reverse mortgage is the same characteristics as a regular mortgage. It's a loan secured against your home based on the equity of the property. The only difference is you don't make any monthly payments, but the balance goes up over time. So this isn't for everybody, but it could be for people that this is their last house they're ever going to live in, and they need more residual income where they need to eliminate their debt due to medical expenses, due to just going from salary commission jobs to pension and social, where it's a fixed income. And that's it. You still own the property. If you still have equity earlier, you can give it into inheritance to your children or whoever else, and they can still sell it and get the equity. Or if the balance goes up higher than the value of the house, it doesn't matter. They won't take any more money than what the value of the house is for. So clients are protected from that then, where in the past they might not have been. Other things is if you have a co-bar, so I just had the scenario the other week, is husband and wife down in Florida. The guy is 72 and the girl is 42, go figure. And he wants a reverse mortgage. They're both on the title and married. So the rule is you have to be over 62 to qualify for a reverse mortgage. That's the age part of it. But if someone else is on title younger, you can still get a reverse mortgage. The amount of loan to value, which is how much loan you can secure against the value of the property percentages, goes down, but it is still possible to do. So that's one of those other myths that come out of reverse mortgage that can actually be done nowadays.
Wow. All right. So 5 different types of loans that people can take advantage of in addition to the normal conventional FHA, USDA, VA loans. So there's way more than just that out there. So much information, Bill. If someone wants to get a hold of you to talk about one of those or any other loan, what's the best way to get a hold of you?
Sure. A few ways. My direct line, 610-660-9700. Our website is www.themillerteammortgage.com. And of course, email william.miller@myccmortgage.com.
Perfect. Thank you so much. And everybody, again, my name is Dot Donovan. You know how to get a hold of me at the information that's at the bottom of the screen here. And please subscribe to my YouTube channel. There'll be many more of these videos to come. So thanks again, Bill.
Thank you, Dot, for having me. Appreciate it. Have a good day.
You too.